Hello traders, welcome back to the channel. Today we are discussing about ICT trading strategies. Not just what it is, but how it works, why smart money really moves the market. Even if you don't trade ICT, understanding these concepts can completely change the way you look at the price action. Let's get into it. ICT stands for Inner Circle Trader, a strategy developed by Michael Huddleston. It's all about how institutions trade, not indicators, not retail patterns. It's about the psychology of institutions and institutional trading activity. The big idea is retail traders provide liquidity. Smart money hunt that liquidity. It means the stop hunts, fake breakouts, they are not accidental. They are by design. These are the building blocks of the strategy. So the first is market structure. When price breaks previous high or low, we call it break of structure. If price forms a new higher low and takes out previous high, it's a bullish break of structure. If price forms a lower high and breaks a low, that's a bearish break of structure. This shows the momentum is shifting. Second is liquidity. Most traders place their stops at recent highs or recent lows. Smart money knows this, so what they will do? They push the price to those levels, grab the liquidity, and then reverse. The third element is order blocks. Order block is the last bullish or bearish candle before a strong move in the opposite direction. Institutions leave orders in these zones. When price returns to these order blocks, it is often a great entry point. The fourth element is fair value gap or FVG. Fair value gap forms when there is an imbalance between buyers and sellers. It shows up as a gap between a high of one candle and the low of the third candle. Price often returns to this zone to balance the market, and it often serves as a great entry point. The fifth element is utilization of multiple time frames. The order flow on higher time frame precedes the order flow of lower time frame. And since price is fractal, whatever is happening at 4-hour chart, it will also happen at 15-minute chart. Typical ICT entry looks like this. Price taps to the higher time frame core element. Then the trader breaks down the chart into lower time frame. At that particular lower time frame, break of structure has to happen. After break of structure, trader has to analyze that whether a fair value gap has formed or not. If fair value gap has been formed, price has to retrace back into that fair value gap, most probably 50% above 50% of that leg, and then that can serve as a great entry point. Stop loss above the recent high and take profit to the downside or next side liquidity zone. Now ICT setups are powerful for high volume time frames. It means New York session and London session. Outside of these zones, liquidity is very thin and smart money is not playing aggressively. Now whether you choose ICT trade methods or not, understanding how smart money moves the market helps a lot. Personally, I don't trade ICT full time, but I study it to get ahead of fake outs and stop hunts. It gives you context, and that context, it's powerful. If this video helped you understand ICT concepts clearly, drop a like and comment. If you want more no fluff breakdown like this, hit the subscribe button, hit the bell icon. See you in the next video.